world. In today's session of JForex Indicators Explained, we will be looking into the concept, the uses, the properties of the indicator known as check-in accumulation distribution line, check-in AD line. We will be looking into its concept in the sense that we will try to understand how this indicator's output value is derived, and once we are done with that, we will also look at some of the examples in which we can customize this indicator to devise a strategy or a system which is likely to have higher probability of making money than losing money. So let us now head to the JForex 4, the newly released trading platform from the Dukascopy Bank SA. This is the Euro USD chart drawn on the hourly time frame. For finding this indicator, there are two ways to go about it. You can go for the add indicator option. There you will have to know where this indicator is listed, and for that you will have to go to the volume indicators. Prior to this, we will be looking into the volatility indicators. Now it's the turn of the volume indicator, and this is the first indicator of the series AD, check-in accumulation distribution line. All right. Or if you don't want to take all these hassles, then we have got the options of quick search. Simply type in the name uh, Che. All right, we got it. We have these three indicators developed by the same person, and these indicators are named after him. In one of the session earlier, we had also seen the uses of these check-in volatility. Now it's the turn of the AD line. And as the name suggests, this indicator tries to give you a good idea in that sense of the accumulation or the distribution of the money for the instrument of your choice. And for that, it takes into consideration the price range. We have to consider the closing price in relative to its high and low range, and along with that we also have to take into consideration the volume data. So overall we get a good idea of the money flow if the price rise is there accompanied by significant enough volume. That signifies money is moving into flowing into the underlying instrument, and if we have the decline and that is also accompanied by significant enough volume, that simply means the distribution or the money flowing out. So that's how this indicator works to figure out the opportunities, and as is the general principle in the market, or you can say a general saying in the market that follow the money. And if you can follow the money, then you are likely to end up on the winning side most of the time, if not on all the times. Of course, there is no perfect indicator, and this indicator is no different. It is also going to generate some false signals and some winning signals. So you have to figure out a combination which is likely to have good enough profitability, and it should be able to compensate for some of the losses which you will keep incurring whenever the signals doesn't really work out. So the formula of this indicator is fairly simple, but if you need the exact formula, you will have to refer to a bit of a search on the internet. I would try to give you an idea of how this works. We have to take closing price of the underlying instrument. From that we deduct the low price for that particular candle period, and once we have this equation and its result in place, from that we deduct the difference between the high price and the closing price, and whatever is the resultant output, we divide it by the difference between high and low. So in relative terms we get to know how the close has unfolded, how the closing value has taken place in relative to its total range of the high and low prices, and then that output is multiplied by the volume data to arrive at the money flow. So if the price is declining, and in relative terms if the close is happening closer to the low compared to the high, that will mean there is price decline for that period, and depending on the kind of volume we are getting, we will have a good idea of what is the development for the underlying instrument. So we have to take that into consideration and then evolve the strategy in such a way that all this data proves useful for us. Now coming to the output of this AD line, here we have this output value in place, and you can notice that these values, whenever there is a price decline, and if we have the value of the underlying instrument on the lower side compared to the prior value, then we will have this output of the AD indicator on the negative side with minus sign. In this case, it is exactly at minus 181 hundred thousands and 623. So but as then when the price rise starts to happen, and with course in due course of time, with the price on the rise, and also with the good enough volume, we see that this AD then turns from negative to the positive territory. So it simply tries to measure the current price in terms of the relative price, and if we have the current price on the higher side compared to the prior period's price, then in that case we will have a good chance of having the output of the AD on the positive side. So this indicator works well when we have some significant price moves over sustained period of time. It is not really going to generate signals when there is a sharp move, but that is not really sustainable. So we have to have in place good enough candle periods with the price rise for output of the AD to turn from negative to positive, and vice versa. If it has to turn from positive to negative, we will need a sustainable decline. So this is a stable indicator in that sense that a single candle period's price fluctuation is not really going to impact these indicators output value too much, and only when there is significant price reversal, and that is also sustainable, we will have these indicator changing gears. So we can use it in two ways. In a simple way, the positive value is indicative of the bullishness for the underlying instrument, and if we have the AD, the check-ins accumulation distribution lines output value on the negative side below zero, that is indicative of the bearishness of the underlying instrument. So if that is the case with the decline in place, we have the bearish momentum for the underlying instrument, and it is better to keep looking for short selling opportunities. And if we have the output value above zero, that is opportunity to go long with positive momentum, likely to help us in making gains whenever there is a continuous or a significant price rise, as the trend doesn't really change very sharply, and trend change usually happens after due consolidation, and rarely it happens suddenly. So that means we will have the time on our hand to figure out what is the development, and trade accordingly. And one more way is to use the zero as a critical marker. So you can also go for the initiation of the trade whenever there is crossover from one side to another, from negative to positive. You can look for buy trade. If it is happening from positive to negative, you can look for short selling opportunities. But these crossovers are not likely to happen too frequently, and this is a phenomena which is likely to happen once in a while. So if you want to increase the frequency of the trades, you can even go for additional additional parameters, like we have the output value of the check-in accumulation distribution line on the rise and it is in positive territory. That can also be an opportunity to start looking for buy trades. And if we have the output of the check-in accumulation distribution line on the negative side, then in that scenario also we can go for short selling opportunities. So this indicator works for both the sides in a reasonable manner. Now let us see what we can do in terms of its editing. We can't really tinker with its input parameters. The input parameters are kind of simple since it takes into consideration the current rates value of the money flow, and then it adds or subtract depending on how the money flow has turned out. It is simply the sum, and it is going to add and deduct, and that is not something which we can edit. So because of that, we don't really have any input parameter which we can tweak. Then we get to the output value, and if you are happy with this color combination and styling combination, you can stick with it. But if you want to customize it as per your taste, you can do that as well. Suppose if you are a fan of the orange color and styling with different line setup, width, and this transparency can also be changed as per your need. Then you can also add levels like, say, for example, 0. So you get a marker in place. You can go for different color combinations, make it a bit brighter if you feel like. So whenever there is a change from one side to another, you will have this output which is going to be easily spotted. So as and when things change, you will be in a position to immediately take the trade if there is any opportunity arising from there onwards. So this is the opportunity, and then comes additional settings which we can tweak as per the requirement. If you want the output of this indicator to remain stable throughout the current candle period, then you will have to opt in for the option of recalculate on new candle only, else it will keep fluctuating depending on the current candle's closing price, which is the applied price for the calculation of the indicator. If you want to highlight the time period zone, you can do that as well, but it is not really going to make much of a difference. You can customize the calculation further. You can use this indicator for almost all of the instruments supported on the platform. Suppose if you want to use it on, say, the commodity segment where you want to know what's the development for the light crude oil, you can have a good look on these indicators output value and figure out that the momentum is bearish, there is outflow of the money, and if and when things turn more bullish, you can then try to go for the buy trade. But as of now, as the things are on the bearish side with decline and the negative territorial output, we do well, or we will do better if we keep our trading outlook bearish and keep searching for the opportunities to go short. So this is a good way to work with this indicator and keep looking for opportunities to trade. So this indicator will help you in figuring out the opportunities in commodity, forex, currency, and equity space as well. There is the equity index, and depending on the kind of price action there is, we will have this chance of working and finding the opportunities. Output value levels, then comes the question of customizing it further. The candle period can also be customized, and it need not be the same as per the chart. It's good if it is as per the chart, it becomes easier. But suppose if you want to keep the output of this indicator independent of the chart's candle period, suppose if you need to vary the candle period to look at the price action, but at the same time you want the indicators output to be defined using a single candle period, then you can do that as well. Else you can use it simply from the chart side. The spread side won't make much of a difference. There is going to be slight difference unless the spread is too high. If you want the indicator to be available on all the candle periods, you have to check in for this option. As you have to specify on which time frame this indicator should be available. Now that we have specified only hourly, so in that case there won't be any plotting of this indicator on other candle periods like 15 minutes, half an hourly, 5 minutes, or 2 hourly, or any other time frame. So this is how this indicators system works. Show indicator on all the candle periods. All right, the base period can be none, or 4 hourly, or daily, or weekly, and this defining of the base period is going to impact a lot. So you will have to Decide what kind of base period you want, and accordingly, this indicators plotting is going to vary. So please pay attention to this setting. In most of the other indicator, it doesn't really impact the output, but for this indicator, it is indeed going to impact the output significantly. So because of that, you will have to be careful and carry out some observations and then accordingly plot the indicator. All right. So that's all from my side for today's session. If you have any query or any idea to share, you can write back to me in the feedback section, and I would be more than happy to take the discussion forward. For further coverage of the market developments, do check out the Dukascopy Analytics page. We are also available on the Facebook. You can reach out to us there too for trying out the newly released trading platform. The link has been included in the bio. So give it a try and let me know how it works out for you. So that's all from my side. I will be back tomorrow with a new indicator, new concept, new uses, new strategies, and we will see how we can best use those data points to figure out the opportunities to go profitable in the trading. See you tomorrow, guys. Thank you all for joining in.